Bitcoin broke one of its most important support levels at $69,000. Yesterday, closing down $4,200, a 6% loss. So the big question on everyone's mind, is this going to continue or are we going to rally into the halving? I think I've got some answers for you today as we see a very similar signal playing out as to what it did at the peak at the same time in 2021. So it's almost an identical signal that we saw 3 years ago for Bitcoin. And what happened next was very severe. Do I think it's going to happen this time? Let's find out in today's video. Hit that like and subscribe as you jump onto the channel. It's your home of macro cycle analysis. We're covering Bitcoin, cryptos, the stock markets, and of course, the real estate cycle. We're here day in, day out, providing you with the best information on the financial markets. As I said, covering Bitcoin, cryptos, stocks, and the real estate cycle. Now, if you want to understand how to do this for yourself, for your own investment plans, for your financial freedom, links in the video description for TIA Premium so you can put together your own personalized investment plan. Now, this signal happened 3 years ago and it called the top, it called the dump. I want to see if we're going to head into something like this or something maybe not so severe. But just a quick check at the ETF inflows. For those who are really obsessed with the ETF, we had another negative day there on Monday there, the 1st of April. And I expect maybe some of the next couple of days to come through as negative as well. The main thing I always stress is do not get wedded to the ETF flows. Eventually, you'll see that it doesn't work so well. But right now, I think a lot of people are very wedded to the idea that this is the only thing that really tells you how the market is going to trade. And when it's going down, they just blame it on Grayscale selling a lot of Bitcoin. And when it goes up, they blame it on, or say the reason is another ETF is buying a whole lot. Now that's enough said about the ETF. Let's look at Bitcoin and these particular ignored signals. As we've covered here for the last couple of weeks, we even got our whiteboard out, just looking at those signals as it occurred. We had the 3 days down here. So this is that top signal just there. Now that signal came from our TIA Gann swing indicator. If you want access to this, link is in the top of the video description. We scroll down and show bar type, where we'll get little indicators on the tops of the bars. Now, the ones we're looking for are 3 red triangles pointing down, not looking at the color of the bar, but just essentially 3 of these in a row from a very significant top. And that occurred in mid-March. You had the all-time high come in, then we had 3 red arrows down here, so 3 red triangles. From that point, we did get a rally out, but so far it's dropped back down. We're potentially in another 3, but I'm mostly concerned with this one here as it came straight out of a top. The main thing that we talked about at the time, especially as the market was falling into this low here at 60, is that typically when we see that indicator, it suggests that we're going to go through a longer consolidation in the market's price, so in this case, Bitcoin's price, than what we had seen previously. So far, that has been absolutely correct. We had a few days down here, we had 1 day here, we had several over here, but nothing like what we have currently seen. So now we are in the process of this particular correction. That correction went from the high to the low, took 12 days, but then to break back above again took about 31, 32 days to break to a new high. I've got the counter here. We're into our 20th day now below the high. So we could still move to a new fresh high quicker than this. But the main idea with this signal is that we were going to be down longer than what we had seen previously. And that was basically 2 months of an uptrend, which then gave us this signal to say, hey guys, there's a lot more supply coming into the market than what the hyped up masses were thinking at this peak. And we know that there were hyped up masses at that peak because of our leverage longs. This is where they were all getting liquidated through this period, this period right here. A lot of people into the market hoping for higher prices, not understanding that some of these signals have basically come into the market to say the supply is coming in, might need a bit of cooling off time, a bit longer than what we had already seen. With that in mind, how much longer could it be? Well, we went back through the chart and had a look at every time that this had come up at previous tops. To save you the more analysis and more data, we found that it was 8 to 13 days was the quickest, roughly about 4 to 6 months was the longest. So there were a couple of times that it took 4 months, a couple of times it took 6 months, and then there were a few at 30 to 40. Now, I know what you're saying. Well, that's all of these times. The main time that we saw was about 4 to 6 months. There were a couple at 30 to 40. So what I'm looking at moving forward from this point are 30 to 40. And should that not pass, then we'll stretch it out and have a look at the 2, 4, and 6 month period. That seems like a ridiculously long amount of time. I totally get it. But the good news to this is that we get a longer consolidation, if in fact it happens. It doesn't even mean that it's going to happen. But as I pointed out a couple of weeks ago, it's good to have this type of data in your back pocket so that you don't get wedded to the idea that the market must go up straight away, that there could be the possibility of a longer correction. Because the worst thing is that you would buy expecting the market to go back up because you buy the dip and it doesn't happen. At least now we can figure out why and potentially how long this could take. We're at roughly 20 days below that high. Should we start to break down from these next low prices at 60K or even where we currently sit at 65,200, we get some closes under there, then we would look towards that 60K and then beyond that at roughly 58 to 59K. There are a couple more support levels below that, but I don't want to get people too freaked out at this stage. We might visit that just a little bit later in the video. First, I want to have a look at these ignored signals that came in at the top, which came in very similar to the previous top in 2021. Look at the top here, 13th, 14th. You had a top of 61,700, 61,600. 13th and 14th of March, we had the top on the 13th and 14th of March, basically $100 difference. That's nothing really on its own. It's just interesting to note that exactly 3 years ago, you had something occur and then similar dates, basically it fell out of bed. And then we're kind of around this point here. If we look at the dates moving forward. So 27th is that little peak. We had another little peak here, 31st. Market fell 1st, 2nd, and 3rd. Let's go back to 2021. You can see it fell here. There's the 3rd. It had a little down day on the 1st, but essentially it fell a little bit later. The main point here is we were going through a similar sort of churn at the top. The corrections from the top to the low there, about 18%. What was it for Bitcoin this time? 17.7%. I find that very uncanny how it happened almost to the exact days and almost the exact same percentages near those tops. Now from there, it did still go up and reach a new high in April. We had a little bit of a push higher. And let's have a look at our 50% level, low to high from that low. Look what happened. It sat on that low and then pushed to a new all-time high at the time of 64,900. Basically, it's the $65,000 top that we know of back in April of 2021. But look at that 50%. All right, let's come back to where we are. This time around, we are just under that 50% level. So Bitcoin, I'd say today would need to get back above 67,300, then consolidate back above 69 to get to that new high for April. Otherwise, we're in the weaker side of the 50% level. So that gives us a little bit of an idea of where we currently sit. We're definitely a little weaker compared to where we were in 2021, similar sort of period, April of 2021, April of 2024 now, to try and get to that new fresh high. But even when that high comes in, look what happened next. A big dump, pump into a lower top, extreme hype for $80,000 was happening at that time. We had a similar thing happen now. There was a lot of extreme hype for $80,000 or $100,000 Bitcoin. You know, this was the dump. Everyone was back on board and the price had to march higher. Price never has to do anything. So that's a big one I think we should all remember. Ignored signals. All right, so we got the 3 days down. We have reviewed that. We've also reviewed Bitcoin market stalling. Essentially, that's the whole point here where we've just stalled now for 20 days. We looked at Google Trends in previous videos. Google Trends are now down for the search term Bitcoin and for crypto. It's not a bad thing overall. It's just we've had so much hype for so long. It can't keep going. We will eventually come back, I think, and put in new fresh highs for the search term. Exchange volume is down. That's across the board. Trading volume on Coinbase, on Binance, on major exchanges is all down. You can see it's down from where it previously was. We've seen the volume drop off and people actually trading is down. It's not a bad thing in this shorter outlook. It just means it's time to cool off and we just don't have that drive to the higher prices as has happened now. So you'd want to see that start to build up, start to push to higher prices over the coming days, get back above 69, at least if you've done all the buying that you can and you just want to see this thing continue to blow and continue to higher prices. That's for the mega bulls who are just Not interested in waiting for any sort of correction. However, you see any more stalling underneath 67, underneath 69, 67, and the volume basically stalling on the way up, but getting larger on the way down, then we probably have a little bit more to the downside to go. Not a bad thing, just reading what the market's got going on here. So that's exchange volume. We looked at ETFs, we did Google Trends, we did this, we looked at 3 days, the Wyckoff Gotcha Bar. So that's where the market gets you stuck in a position. It gets all these late buyers stuck. That, to me, looks like a pretty reasonable gotcha bar. And the point is, they get in late, they're hoping for higher prices, and then out of nowhere, market flushes. It closes, it crashes, and gets all of these guys into losing positions, the ones who get in late. Typically, that's the gambling mindset. They get in late, they get into a loss, and then they hold on and hope for higher prices. Now, how do we use that? Well, we look across to where that peak was and draw a line here, looking at the top of that price. It's roughly about 72,400, so it's a round number, 72,500. You can see how long it took to try and test that level. It barely got above $71,500-ish thousand. It didn't even get to 72K on 1, 2, 3, 4, 5, kind of 6 occasions there before it fell out of bed. Look at what happened in 2021. Same thing here. It started to run into that top there. That's my gotcha bar. I put the volume on. You can see how much volume there was compared to what happened previously. Remember, none of this is here. When we are trading, that's what we see. We do not see what happened before that. So this was a huge high volume bar compared to most of what had happened over the last month and a half. The market kept going down, but then sprung back, and you had the same sort of sentiment from the crazies hoping for $80,000 Bitcoin. They said, it's on. But you had 3 red days. This was a red, this was a red, this was a red. They were the 3 red triangles. I'll turn this on, not bar count. We go here, bar type, and these will be 3 red arrows. There they are, 3 red arrows to the downside from an all-time high price. So this is telling us that there could be bigger corrections to come based on that signal alone, and it's going to be longer than what we had previously seen. Did that occur? Well, emphatically yes. There was a much, much deeper correction and a much longer correction. Now note here that I've said it doesn't mean that it doesn't suggest that we will get a deeper correction. Typically it means that we're going to see a longer correction. Now I've got the current percentages here, 20 to 22%. That's what we have seen. So it's not necessarily we have to get a deeper correction, because the market could just go sideways. It could just trade sideways and just take a lot longer, whereby it would squeeze out the guys who are just hoping for the price to go up quickly. So it brings on the boredom, it brings on the dread that it's not going to continue up. And so what I've got here is, what do we do next? Patience. Look for reversal signals. Do not get bored or scared and leave the market. So that's the main thing. Don't get bored. Don't get scared the price could collapse and we're not going to see higher prices. And when you're ready, this is the best part, enter positions while fear is dominant, but not too early. So go back to point 1, be patient. And you look for the confirmation to the upside, which is why I always refer back to the swing indicator. So we look for the confirmation that the market is about to trend up. You might not catch the exact low. It doesn't matter. If you're in the belief that we have a lot further to go in the cycle, well, then you probably have a lot further upside to go. So you don't need to catch the exact bottom. Just wait for that signal to occur to confirm that we should see upside from that point. So what else do we know? What else do we know from the market? Well, we've done all of these ignored signals. We've covered these off. We understand the gotcha bar from the early days of 2021, how the same thing popped up from there. From that signal at the tops, the market corrected about 53 or 55%. There it is, 55% to those lows. And the whole thing took about 6 months to get to new fresh highs. That was one occasion. The other occasions have been through here. And again, it took several months at that point. I want to give you some more positive vibes through all of this. These things also happened towards or around the halvings. You got 2016, there was another peak, market dropped off. We had 1, 2, 3, 4 red days down at this point from that very significant peak. And then it took several months for it to break out. The halving happened in July, you had the correction, and then this got very quiet. There was sideways action here. People got bored. They didn't think Bitcoin was back on and it was all over. That's potentially where we could go, but that would be the best thing if you remain with the market. That's exactly what you want. You don't want to hear it get hyped up again tomorrow or next week. You definitely want to hear some cooling off so you get entry points, and then the market climbs away and those people miss out. They come back when it peaks again, they get dumped on. They come back when it peaks again, they get dumped on, so on and so forth. It's a continuing rinse and repeat effort here. What other information do we have around the possibility of a correction or a temporary pause, maybe a trading range between the 50s and the 70-ish $1,000 region? We've looked at the monthly swings. You can throw these on the chart. There's a lot of data there. We've had several months up now of green. That's 7 months of green. But on our swing indicator, it's 6 months. So 1, 2, 3, 4, 5, 6. Maybe we head into 7th. We've looked at how that could happen like the previous cycle and then close down. So that's a possibility as well. But essentially, a lot of things were pointing to this coming to at least a short-term end. That's all I'm looking at here as a potential pause for a healthy correction, for a healthy bull market. It seems like we're kind of on that track now. We would need to see price breakdown, as we've talked about, through those levels of 60K being that bottom, and then onto the 50K levels that we have covered here. You've got some support back in the mid 50s and also the high 50s. But in terms of the monthly turns here, we have looked at turning points around June and April throughout Bitcoin's history. So we've seen that going in every single cycle. There's an April top with a 5 to 6 month range below that top of consolidation. We had a June top. There's another 4 or 5 months of consolidation below that top before it breaks out to a new all-time high. You had a top here in November. We have a lot of end of cycle tops around that November-December period. Also happened in 2013, 2017, 2021. Doesn't need to happen again exactly. We'll wait and see. Maybe it's going to be a January top. The point I'm looking at here is you get a top and then several months of consolidation. So from the shortest end, it seems like we're heading towards that sort of 1 to 2 months, to the longer end, potentially around that sort of 4 to 6 months below those tops. I get it. Most are only going to hear 6 months, but please, 1 to 2 months or around that sort of 4 to 6-ish months. Obviously, the chart is going to give us more information along the course of the market price action, and that's what we have to continue to follow. Where do we find support? Where does Bitcoin find support? Does it break down from the 60K level, which then means we would have to head somewhere into the mid to high 50s to find the next level of support? If that's the case, then we could probably look more towards a sort of 3, 4 to 6 month range. If we find support here, keep holding 60K like we've done, higher lows are forming, great signs, then maybe we look towards that sort of 1 to 2 month range. That is all good news. It's all good news because it gives us more time to accumulate. And if there is a longer consolidation, that would mean we possibly won't end in a left translated cycle. If you've got this extra consolidation here, maybe we bring this back down. We've had the little peak that I had a little arrow here, possibly March or April based on what we had seen previously. If we get these extra few months of consolidation, which would be fantastic, maybe that drives us towards the election. And then we start to get another big move to a new peak sometime late 2024, early 2025. I think it's all going to depend now on whether this is a longer correction and whether Bitcoin can sustain a price that keeps it in a bullish state. Anything above 48K is going to be fine. That's not me saying it will get to 48K. I'm saying that is a major pivot point for Bitcoin. Should it break down from 48K and close under there on a monthly basis, that would be extremely negative. But meanwhile, anything up here is going to be fantastic for the longer health of the market. It's not going to be great for those who got in at 60 or 70K, but it's going to be better for the health of the market longer term. In the meantime, you've got the altcoin market to look at. And what we've seen with the altcoin market is it get rejected at the tipping point. Last tipping point in the last cycle, you can see as it got to it, it broke straight through. This time, however, we've had a bit of rejection here. So this, again, isn't a bad thing. We see a few weeks down at this point because I'm on a weekly chart. Again, consolidation, possibly a great time to be accumulating those stronger looking altcoins. Now, if the correction remains under the tipping point here, roughly about 680 billion, well, then there's just going to be more time for the altcoins to consolidate and to DCA into all of your 40, 50, 100x type of altcoins. As we break through the tipping point, that's typically where things start to get a big move on. A lot of speed comes into the market, and then those prices get away from us. So it's not that we're breaking down yet. So it's important to keep an eye on these things in case we do get some closes up here and then we just start to take off. What if we just consolidate at these higher prices, sitting above 50% at 580 billion, and we start to close at those higher prices? That could be a quick spin into fresh prices very, very quickly. So we can't lose track of where we are now. Come back down to this. Patience, look for reversal signals. Do not get bored or scared or leave the market, no matter where that price goes right now. I think this is that big, significant time in the market that I looked at back in late 23, early 24 for a quarter one, first half 2024 type of correction. I think we're in that now, where we're definitely seeing it with several altcoins, especially against their BTC values. You're seeing these come down a lot, and they have been down a lot. When I look at examples like Injective that I talked about earlier in this year and late last year, you can see December, huge bar. And I pointed to the fact that maybe Injective could play out like Link did last cycle. Huge gains early on, and then it spends the rest of the cycle just trying to hang on. It just basically holds its gains, maybe puts in something not that great compared to other altcoins out there. Something that is in a stronger position is Solana. Solana's for last month holding above the 50% level. You want to see this at least remain above that 50%, but about 250,000 Satoshis. That would put it in a good position for bigger gains later, which is where you start to rate your gains against the USD value. So that's what most people are looking at here. Now, it has hit the tipping point. It hasn't broken above that yet. I'm not saying it gets down to 130 or 140. I'm just looking at the corrections here. The last correction it did through December into January was about 37.5%. So even if it got down to those previous tops, this previous tipping point top, even the 50% level at that 130, it's still a smaller correction than what it did in that first move out. So nothing to be scared of here. The most difficult part from here is figuring out how much do you deploy now or how much do you deploy later if it goes any lower, knowing that it might not go lower and you could miss out and find the price a little higher. That is the tricky part for most traders to figure out. So that's why I suggest something like a pyramid strategy, where you would deploy a lot at lower prices once you've identified where you think the lowest price could be if there was a correction. And then you start to deploy. Well, I'll put medium amounts in here and then smaller amounts as we go higher in price. That's the main challenge for you guys now. That's why you can't go anywhere. You got lots of work to do, even if this is a significantly longer correction than what most are anticipating. There's plenty more to come for crypto and Bitcoin. So I'll see you back here at the next video. Till then, take care and peace out.